So, good morning, traders. How are you all doing? So I hope that the sound quality is good. So let me just check it out. Should be actually okay. Yeah, everything is good. So yeah, guys, how was your weekend? Hopefully you're ready right now. Get some new energy for this new Forex week. Because yeah, let's see what it will bring us. How many possibilities we will see. On the weekend, I've shared with you two videos. The first one was that one with the EURUSD, where I show you. Okay, sorry for that. Yeah, I actually don't know, but I always get some phone calls from London and from Germany and so on. So from some Forex sellers, they would like to sell me something and stuff like this, and they're just calling me. Sorry for that. So guys, on the weekend, I shared with you the thing with the EURUSD, how to use the Fibonacci retracement in order to see what kind of movements you can expect. And yeah, also on Sunday, a full breakdown analysis on every single pair. And in today's live stream, I just want to show you right now what happened during the weekend, because this is why having a look at the weekend doesn't make always that much sense, as you've seen so far. It only makes sense if you make the analysis based on the higher time frames. This is what you've seen in the video, because I started with the monthly, weekly, daily, and so on. And what will happen then till Monday is super manipulative, as you can see. So the EURUSD, the GBPUSD, especially the GBPUSD, was crazy. And this is why it is the best to not trade during the weekend, only if you are a swing trader and you holding your positions. That's a thing which you can always do. Okay, this is something which will always go into your favor. Okay, but never get into a trade during the weekend. That doesn't make any sense, as you can see it over here on the charts. Okay, so good morning, Matthias. Good morning, Weasley. Thank you for the confirmation that the sound is clear. Hello, Amir. Hello, Saranrai. Okay, guys. Then I would say we're going to go straight into an analysis and having a look what the DXY is sharing with us, what new information we have. So we're going to basically have a look on the weekly candle close, because this is what is important today. And yeah, this is still valid. This is the analysis with my take profit targets over here. As you can see, the 90 level over here and the 80 level just below. So those are our two key levels. This is what I like to do always on the DXY, to map out those key levels. Look at the 90 level. It is a strong level of historical support resistance. Okay, and in this case over here, this is a good example. In this case, that was just a clean fake breakout in this case. Okay, because this level is strong support, and what hedge funds and financial institutions like to do is they are buying at those levels. Okay, don't get me wrong, they really got their buy limit orders over here. But why is the market dropping that much to the downside? Do you know it? Why the market is always dropping more to the downside? So I'm going to show you right now over here from a clean chart. Let me just remove this. Just a clean support resistance example. So you got, for example, here you got a resistance. Okay, this is your resistance level, and the market is moving to the upside, to the downside, and so on. Okay, at this moment you just map it out. Okay, and you will go short from here. Okay, because you can see, okay, the market is moving here below this area. Okay, this is a strong resistance, and you are going to anticipate this movement to the downside. Okay, which is not a wrong idea. Okay, if you're going to do this, then just go short over here. But the thing is, what most of the times will happen over here is that the market, when it do something like this, when it is a resistance, it will then suddenly, let me just make this a little bit bigger. When a market is at a resistance area, it will then suddenly make movements like this, so like this, and then suddenly, boom, move to the upside. At this specific price then, the retail traders in the first place over here, they got stop loss hit, okay, because they went short. And after this huge movement, they are going to buy it from here and anticipating this movement to the upside. But what will happen over and over again after the market is at this movement over here to the upside? It will not go up. In fact, it will just break to the downside, rejecting this level and then dropping lower. And this is going to be then your head and shoulders in this case. Okay, this is how those patterns are super powerful. Okay, so the M formation, the W formation, the head and shoulders, those are super strong patterns, but you need to know how to implement it in your strategy. Okay, because most of the times this is in this case just a trap. Okay, why is it a trap? At what price the hedge funds will take their orders? It's not difficult. They will really take it over here. They will take their shorts at this area, okay? But they will not only take shorts over here. So let me check. This is the price where they are going to take shorts at this area. And here below, they're going to take a buy. They're going to do both trades in this case. But they're going to put the most liquidity at the shorts, because this whole thing over here should go to the downside. So if you have a look on the whole context, maybe this whole thing will be like this, okay? And in this case, you will have over here as well a supply area just up front. This is why I use supply demand, because supply demand most of the times are here to save you from retail traders going short at the resistance. I don't like to take shorts at a resistance. This is something which doesn't make much sense from my point of view, because most of the times you will be trapped in this pattern over here, because you got over here this short. Okay, you know, hedge funds are going to go short, but their liquidity will not be given at this area. Of course not. Why? Because at this area every single retail trader will go short. And this is why they need to place a buy order just below to push the price to the upside. Okay? Because if they are going to push the price to the upside, they will hunt all the stop losses from all the traders who took shorts over here. And they will also have short positions over here. Okay? So don't get me wrong. They will have multiple positions set for the movement to the downside, and they will then afterwards have here the fullest liquidity, and they will drop this price crazy to the downside. Okay, maybe then they will not buy it from here. That's not absolutely necessary. Most of the time the most liquidity will be located over here, but they will of course take a short from here, a small short, just to activate in the first place their buy orders, just to illustrate you that this market will move to the downside. But they will have their buy orders exactly over here, and from here the market will then go crazy to the upside. Okay, crazy to the upside, smashing all the stop losses from the sellers. And in this case over here, during the movement to the downside, everybody will think, okay, this is just a break of resistance, a retest of new support, and the market will go to the upside. And this is not wrong if you do something like this, because this strategy is definitely profitable and so on. But this is kind of the manipulative pattern in this case if you don't understand supply demand, because they are going to just use then again the liquidity against you, and they will just bring the price to the downside, giving you afterwards a small retracement, maybe with this retracement to show you, okay, right now it is the chance to buy it, and then boom, it will just smash to the downside. This is just a common pattern over here in the Forex trading market, and keep in mind that you should avoid trading support resistance. Okay, the best thing is if you will have at the same area some supply zones. Okay, if you have also the liquidity on your side. In this case over here, you don't have the liquidity on your side. That's not possible, okay, because you already started a nice impulse in this case, and you would like to see some retracement for sure. And in this case, as you can see, perfectly till the 0.5 at supply area, for example. Okay, that's going to be the case. But also in this case, you can view this whole thing over here more as a support resistance. But this is the support resistance which is in your favor because it is using the liquidity. Okay, this is how I use it. This is how I view this whole thing over here. And then maybe you can also view this whole thing then as this. Okay, That's then your trend line, and that's going to be your break and retest. Okay, this is how it will then work at the end of the day. So, do you have any questions about this chart pattern over here? Because this is why I just illustrated over here, because in this case, you can consider this movement over here as a fake breakout. Okay, it can be a fake breakout because the market is still in a downtrend. Okay, you expect movement to the downside, but this movement over here is just very spiky, and because of this movement, this is why the market looks like waves. Okay, this is why it looks like this. This is why the market will not look like this. Will not look like this. The market will look like this if you view it then afterwards from a line chart. Okay, because normally, always during those contraction phases that you have over here, the retail traders are going to be trapped in order for them to short exactly here at the resistance based on the lower time frames, but they are going to go up higher. Okay, just to illustrate, okay, maybe we have a trend change or something like this. So they are really rough. They're using everything against you. This is something which you need to have always in your mind. Okay, whenever you're going to go for a trade, just keep in mind, okay, there are bigger players in the market. There are players who have much more money than my trading account. Okay, we use a leverage. Okay, we use high leverages in our trading account because we can move the market like they can do. But just keep in mind, when they use the money that they have with leverage, and that's crazy, man. Okay, that's crazy. Then whenever they're going to go for a buy positions, this market will pump up, man. That's crazy. It will pump up. But they need to do it in a direction so that they are going to have the most liquidity on their side, because this is how they can afterwards execute it with longer movements and with bigger profits. Okay, they are not here in this game, in this business, to do gambling. Okay, they are not here to potentially lose some money. No, they have a big team behind them. Okay, a lot of professionals. They have traders who are doing elite wave. They have traders who trade patterns. They have traders who trade support resistance. They have manipulation traders and so on. They have algorithm, everything. They have everything on their side. What our job is, that's simply, we need to follow their movements. We need to potentially predict where hedge funds are highly interested. So price of interest, I like to use it like this. Price of interest. So price of interest, I like to call it like this, because those are the liquidity areas where they potentially like to put their buy orders or sell orders. That's it. This is how I use it, and this is why I'm trading like this. Okay, I think we talked enough right now about hedge funds and strategies like this. Isaac, can you backtest, bro? I actually don't know what you want me to backtest. Just write it down. So, let me then go back to the charts over here, looking at the DXY. And yeah, the point was the 80 level in this case, so let me just map it out again. So the 80 was just below over here, and the 90 was exactly here. Don't like to use red colors, that looks so strange, so aggressive. Okay, I like always to use something like an orange or green or blue, something like this. I try to avoid red colors. Red colors, I only like to use it when it is super important that I should keep on that level on eye. But in this case, this is a neutral one. Yeah, that was the case over here. Look at this. You got a pretty nice W formation. There was just a liquidity grab, and your real entry should have been here at the retest based on this impulse over here, which was a W, and exactly at the neckline area, the market then pumped to the upside. This is why it is super important to always wait for your confirmations. Okay, don't hurry up. This is what retail traders will always do. At the moment when the market will come to this level, immediately they will execute buys. Immediately. But that's not the case, because you will always need to find out, okay, will this level really respect my support area? So when the market will go from here, will it really respect and it will go up? Or will it, just giving a quick check on it. This is where most retail traders think, okay, they will make the biggest profit of their life, but the market then will just go more lower and then afterwards giving you the movement. Why? Because with this move to the downside, they will hunt your stop losses, and then afterwards it will spike to the upside and it will go without you. And how you're going to make the best entry would be here during the correction, because here you got the confirmation that this market will pump up. Okay? That's super important, guys. So let's finally go back to the analysis. So we got the 80 level, strong level. As you can see, it was tested multiple times. Also over here, nice entry. Here it became resistance, went lower again, here again resistance. And yeah, this is why from here we definitely wanted to see the market at least giving you some movements to the upside, because here was definitely enough liquidity located. But also, if you just look over here to the left, you will notice that this is an area of demand, meaning that from the level also you would have seen some movements to the upside. But based on the whole context, we couldn't expect from here a complete reversal. That was not possible. Why? Because the market is super hard trending to the downside and is creating impulses to the downside. And this is why we wanted to see from here the market only giving us some sort of retracement to the upside. And this is what the market is giving us. Based on the last impulse lag, you can see that it perfectly retraced till the 0.5, which is the best aligned with structure. That's it. This is why from here we can now easily expect the market to continue to move down lower. This is what the monthly is telling us. Switching down to the weekly, what is the weekly telling us? Well, basically the weekly the same. We tested this previous level of support, now turn resistance, okay? Pretty nice, okay? Boom, boom, boom. And this market is currently in this correctional channel, collecting the liquidity to move down lower. Okay, looks nice for a bearish momentum. Looking down on the daily, what we can see here is, okay, we had a trend line break plus retest. We got our retracement based on this impulse, and we can expect the movement to the downside. Now, there is one thing which is telling us another story on the daily time frame for the DXY, which is in this case this blue pin bar. Now, what does that mean? A blue pin bar in this case, because of we already had an impulse to the downside and we should expect some retracement, could be in this case a signal that the market will fill in this wick. Okay, that's a very common pattern, very strong pattern in this case. You can also take it from the fib retracement. We have enough. Okay, we really have enough. It would have been, look at this, perfect retest at the support resistance that you got over here. It is aligning the best in this case with structure, with this whole structure. Plus, in addition, that was a previous level of demand, now turns supply. That's on your side. Plus, you get the perfect trend line retest in this case. Now, basically, you could easily expect right now the market to move down lower, for sure. And you expect the market to move right now to the downside till this level of support. However, this daily candle could also, on the same side, easily fill in this wick. For this, we're going to switch right now to the 4 hours to see how the market will move. Because you are currently at this level of demand. And if we are going to break this level of demand from a 4-hour perspective, then we cannot expect this higher movement. It's not possible. Okay? But as long as we are above this area, we could easily expect the DXY to go up even higher than this liquidity here. Okay? That's definitely the point in this case. And this is why right now it is not absolutely clear what the DXY will do. And this is super important for us, because if we don't know what direction the DXY will go right now with the next movements, then we can also not predict to 100% what the EURUSD, what the gold, and also what the GBPUSD will do. And that's the case. This is why you have currently 2 options. You got option number 1, the market will break it and will just go straight to this support area, or it will go up higher till the 0.5, which is the best time frame in this best level in this case, because you got supply area right up front over here. So this is our supply area where, yeah, I'm definitely also looking for potential short afterwards, okay? That's going to be the case. You got two options right now on this DXY chart. And also, if we're going to hit the 0.5, that will be also perfectly in alignment with the trend line retest, perfectly with structure, because you got here the supply area and you don't only have a support resistance. Okay, that's the case. That's going to be the example that I explained to you previously, but it is not absolutely necessary. And this is what we need to finally look right now for some further confirmations to see if the market will respect this area, and if it will respect the area, it will go up. And now look to the left, you also got over here still daily level of demand, and this is why you are currently a little bit trapped between those two levels. And this is why right now it is really not easy to do a trading decision. Also by myself right now, I don't know 100% what will happen. We can really expect both scenarios: move to the upside, okay, till this drop, or from here drop. Two options, okay? But right now, guys, let's switch in this case to the Euro USD, and we will see here the exact same scenario like on the daily, like on the DXY. I would like to show you right now from a clean chart right now why we have the same scenario. You got over here also impulse, correction, impulse, and your overall add-on monthly area of supply. That means from here you would like to see the retracement, but the market already finished it by testing the 0.5 from the monthly perspective, which is the one which is perfectly aligned with the previous level of resistance, now turn support. So as you can see, here was a lot of liquidity located. Why? Because of all retail traders who is looking on the monthly time frame, that we're just seeing bullish momentum, and this is why the market then boom spiked to the downside to grab all those stop losses which were located below these areas from retail traders buying this market during this strong movement to the upside. And this is, yeah, quick spike. Just imagine you're a swing trader in this case. Okay, you've bought the Euro USD from this level, then you added some positions here, you added some positions here. Everybody was trapped by this movement to the downside who did not close it during this area of supply. Because also, if you would have entered this market here, you've been holding these positions right now 3 months. 3 to 4 months. That's long. That's really long. And you're just looking, you're good in profit, and you just want to close it. Now, during this movement, those traders are going to be a little bit emotional. Why? Because their profit will be minus 50% during this movement to the downside, and they would just think of, oh my god, I just hold these positions right now for almost 4 months, and right now I'm minus 50%. And they're just thinking of, oh my god, I need to close it, because maybe the market would just keep dropping. But that's not going to be the case if you understand how this whole market really works, like based on liquidity and supply demand, okay? And this is why only a few swing traders, they hold it during this whole movement over here, and then right now they're back in profit. They're back in profit. They're right now super happy that they didn't close it. And every single swing trader who closed it around that area, they are right now very angry because they missed on this crazy opportunity right now. Professional swing traders, they've added their positions exactly over here. That's it. This is how you need to do it. And this is why the market is super emotional for most of the traders. It doesn't really depend if you're a swing trader or a day trader. In generally speaking, swing traders are not that emotional. Why? Because they actually don't look that much on the charts. But when you will imagine that the Euro USD just dropped minus 50% based on your profit, then you will just a little bit have a look, okay, what's going wrong over here on this chart? Do I need to close it or not? And yeah, that's why Forex is always on the first view, it is easy, okay? If you just have a look right now, I'm just telling you, okay, I do expect a retracement till the 0.5, and from there, the overall bullish continuation. That's not difficult, okay? That's really not difficult right now. It really happened like it was. You can check it out over here on the past YouTube videos. If you're a follower for a long time, you know that this is something which I told you. I also told you maybe we got the potential to go down lower to the 0.618, but overall, I was expecting bullish momentum to the upside. And in this case, it looks super easy. But on the other hand, if you're really in the trade, if you really risk your money Okay, your hard working money. So you went to your 9 to 5 job, you was just hard working for that money, and then you put it in this trading forex market, and you're just hoping that you will make money based on your analysis, based on the YouTube videos that you've watched, based off your inner cycle, and then you will just see that this market will drastically will go against you, and you just look at the chart and you just think of, oh my god, that's crazy right now. And that's the point where you will get emotional, and at that point when you will get emotional in this business, you've been a loser, because you will do something, you will do something which you will never do if that wouldn't be your money. Okay, just imagine if you would be right now on a 1 million account on a demo, and you will just buy the market over here. Would you really close it at this area when the market will go minus 50%? I think no. I think you will not do this, because it is not your money. Okay, if it will then go straight to stop loss hit, okay, you didn't want money, but it is just demo. Okay, and if it is your real money, you will close it, because that would have been profit where you think potentially you will lose. Okay, if it will go down straight to break even. And that's the case. This is why Forex is so emotionally, and you can only understand this when you're in a trade. Okay, maybe the next day, maybe a few weeks later after this whole thing happened, you will not be that emotional anymore. Okay, but only at this moment, when you will really see those numbers on your screen, then you will get very emotional at the moment. And this is why in this business you don't have to be emotionally. You need to take your emotions and put it away, guys. Just put it away. Also, if you have a losing strike, if your trades are not working well, just get your emotional out. Stick to your trading plan, and at the end of the month, at the end of the year, you will be in profit if your strategy is back tested and it is good. That's it. That's the thing. If you understand this whole thing over here, then this whole Forex procedure will not be that hard for you anymore. And I know it is very hard for a lot of us. So actually it is so super hard for, I think about 99% of the traders are struggling with their trading because they are too emotional. And maybe only 1% they really understand how it really works, how to just, don't be emotional, just to trade those setups who is fitting the best with the trading plan. And the thing is, if you don't have a big money account, okay, if you don't have right now, let's say 100k, so you don't have that 100k account. This is what you basically need if you really want to make easy life on trading Forex. If you have 100k, if you build your initial capital to 100k, then at that moment, you will don't be that emotional anymore, because at this price you will just risk maybe 0.5% of your capital, something like this. And also, if you will have a losing strike, it will not affect you that much, because you will not lose that high amount of money. Or let's say you have 1 million. If you have 1 million, then this whole procedure will be even more easier to you. The more money you have in this trading market, the less emotional you will be, because you can use lower risk on a percentage basis, and you will still make the same money like people who are trading a 100k account, okay, or 10k account or something like this. And this is why I always tell you, when you would like to really start trading at the beginning, you can really use a 1k account, something like this, just to test you a little bit out, okay? Because also, if you're putting much more money, if you use, for example, 1k, you will trade carefully, okay? You will really trade carefully, because you don't want to lose your 1k money. But if you're going to start with a $100 account, you will just do extreme high lot sizes, and you will lose that money in just one day, maybe 1 day or 2 days, something like this. Everybody will lose that money super easy and super fast. And this is why that's not the key point how to get started. You should really start at least with 1k of dollars. That's super important, because then you're going to really be a little bit more carefully. And if that's your first account, you will really blow it. For 100% you will blow your first account. That's also what I did. I started with a 1K account and I worked it up to 80K account in just 3 weeks. This is how I did it. In 3 weeks I made that profit. And I just thought, oh my god, Forex is so easy. Forex is the best. Then 1 day later, when I had that account, I had 0. I've blown it completely off. Okay, that's the thing. Okay, so you need to always be careful. Also, if you have a huge amount, you need to be careful. You need to stick to your trading plan. At that moment, I didn't have any kind of trading plan. Nothing. I had nothing. I was just a little bit gambling in this Forex industry. Of course, I did Forex analysis, but I just thought at that moment, every time when I was at a resistance, okay, I will need to short it right now with my full potentially. Just go short, and then the market, what it has done, fake breakout, and then it went to the downside, exactly like I explained to you at the very beginning of this video. Okay. So, let me check a little bit the comments right now, because we're talking right now very long about Forex stuff. Yeah, check USDCHF. I will do hello from Argentina again, 4:30 in the morning here. Man, that's crazy, Michelle. That's crazy. I'm really amazed about that. So thank you for your support. Do you say something about GBPUSD? No, I didn't. I will do it immediately. USD GBY short position. Yeah, I will check it out. Masha, I turned $850 account in 11K in 40 days. That's super, man. That's super nice. If you reach that, then probably you used much more lot sizes, or you have a super strategy. Okay. Also me, then after I've lost that 80K, I started again. This is how my whole business started. I started then again with a 1K account, and I turned it within 1 month in 30K. But I'm here very honest, I used way too much lot sizes at the moment, but my strategy was very good. Okay, I had a good win rate. Actually, I won almost every single trade, and I had some losses, but I cut them very early, so that I didn't had one loss day, nothing. So at the end of the day, I always had profit. That was my mentality with that strategy at that specific time. I was just using the money, and I just wanted to end every single day in profit. And I was just looking every single day then for my potential setups. And the thing was, every time I was looking, when I was here, for example, at resistance, I was selling the resistance, and when the market went then to the upside, I was trying to buy it, okay, and then I bought a market and so on. So I always tried to do everything that was possible in this market to go for profit. So I was entering then at the demand area from here, going up higher and so on. And when I had over here, for example, a loser here, then I had a winner on the other side over here, for example, because I was buying the market from here. And that was my strategy at that time. So I was just looking to trade every potential direction over here. And yeah, that's also a strategy that you can still use, of course, but need to check it out if it works for you the best. Right now, I'm just more relaxing. I'm just using high risk rewards, and this is why I don't care when my trades will hit my stop losses, because I know when I will have 1 or 2 winners, I'm good for the whole week, and I will sleep good at the weekend. Okay. Then, guys, let's finally do some analysis. In this case, I would like to continue with the EURUSD, because I explained right now the DXY, and on the EURUSD we will see very interesting things over here. So we know that from a monthly perspective, we can expect the market to go up higher. The weekly is also super bullish. Why? Because if you have a look over here, the market has given us this nice impulse, followed by correction, and right now it respected this previous level of resistance, now turns support. That means from here, as you can see, the market is rejecting it to the upside. What we can also see over here is, if you have a look on the latest support resistance, those are 2 types of support resistance in this case. You got here a global support resistance, or you have a support resistance over this whole region over here. In this case, this is more stronger level based on the big banks. They like to put their orders exactly at those levels. Okay, in this case, they put it at 1.20, something like this. And then the market from here went all the way to the upside. In this case, you also had a demand area on the daily. You will see it. But in this case over here, you also had a previous level support over here where the market break through it. But with the next weekly candle, it closed back into this area. So it didn't really broke this level because we are still above that area. What you can expect in a situation like this is that the market will just test this level before giving you the next movement to the upside. Switching to the daily time frame, guys, I told you that I would like to see from this area of supply a short. The market is giving us here a small movement, but immediately went all the way to the upside. And this is currently the case right now. This is kind of the indecision in this market because we got over here a nice potential head and shoulder pattern. Where do we have it? It is this one over here. You got here the left shoulder, you got the head, and right now what you do expect is the completion of the right shoulder before the market will then just easily continue up higher. Specifically, you would like to see the market right now giving you a movement till this level over here, which is also perfectly with the weekly, because on the weekly I told you because of we got that fake breakout, we would like to see the market testing that level. I mean, we tested it over here, but because of here we got also the bearish pin bar, meaning that we would like to see the market to fill in this wick. We could easily expect right now that the market will go to the downside before giving us this movement to the upside. This is kind of the indecision currently in this market, so we cannot see 100% what it will do right now. This is why right now we need to monitorize price action over here, and if it will give us the confirmation that the market will drop down, then go for a short only till this level. Here on this level you also got daily demand, which is this level here a little bit more below, and you can also take the fib retracement in this case to map out the best level. As you can see, that level over here was kind of an retest of the 0.382. However, we could still expect a lower target like the 0.5 before giving us the movement to the upside. The 0.618 is not that one that I expect right now. I expect more the 0.5, which would be here perfectly with the daily demand. So I'm talking about this level over here specifically. Okay, that's my level where I would like to see currently the market going to the downside before going then afterwards higher for higher highs, higher lows. Currently, you have a market which is at equal high. Okay, that's definitely right now equal high. You can have a look over here. That's our area of supply where I'm looking for potential short setup in this case. If it will go down, super nice setup. If not, then we need to look for buying setups. Okay, because then the market will go up higher. Okay, and the next target will be then definitely this area over here. This is where I'm looking to close then my buys. Okay, so right now, decide for yourself if you would like to risk this movement. This movement to the downside is more risky. Just to keep in mind right now, the best trade would have been, of course, to go long. But if you will go long, then keep in mind that this is still possible. And it is also still possible that the market will go down even lower till this level. This is what I do not expect, because from my point of view, the correction is done. You got over here an A, B, C correction. And with this movement, we started wave number 1. And currently, I'm expecting the market to give us a proper correction to the downside. Specifically, to fill in this wick is what I do expect currently, before the market will then push up higher. Okay, and this is what I expect on all dollar pairs currently. So on EURUSD, on GBPUSD, and on gold, AUDUSD, a movement to the downside. Okay, then quick check on AUDUSD. That was the last analysis that I shared with you on TradingView. Unfortunately, we got here the same scenario. The market has given us only a small retracement, specifically till the new level of demand that we had over here, and it was rejecting it all the way to the upside. So this analysis is unfortunately right now invalid, and we need to do a new one. Based on the monthly time frame right now, the next target is the AD level. This is my next institutional level, where I see AUDUSD moving from a long-term perspective. So I would like to see AUDUSD going up till this level before giving us afterwards based on the monthly candle closes, I would like to see it closing over here. Maybe not this month, but maybe the next month will close within this area, and afterwards it will give us then again a nice retracement, specifically till this new level of support. So all across that area currently we have new support. Switching right now to the weekly time frame, guys, what we can see here is that the market is approaching again the resistance, and this is where again retail traders will go for shorts. Also some hedge funds will go for some shorts, but only for a retracement from my point of view, before afterwards breaking this level and going up higher. So you have it all, look over here. Daily looks super nice. It gave us a reaction on this daily supply, for sure it gave us, but it didn't went to the downside like I wanted to see. You can see it over here, a nice W, and the market is just pushing. So AUDUSD is very hard trending sometimes when you can see, and when it is in a correction, then this correction is some kind of very weird. It is likely going always up to supply and demands, very slowly breaking those lows and so on. But yeah, it's just behavior on AUDUSD. In this case, it's not a problem. What we should focus on AUDUSD right now is to buy it. Okay, buy AUDUSD, look for some potential retracements, and don't sell it right now. Don't look for potential shorts. You got here some supply areas, of course, but the best thing would be to buy it. Okay, right now also here, don't buy the support resistance. I like to buy it maybe from this level. So if it will give us right now proper retracement from this area of supply where we are currently located, you can map this whole region. It's very high in this case, and you can expect maybe this sharp movement to the downside and then maybe going up higher. So from my point of view, definitely we will go up higher in AUDUSD. However, looking right now for a potential short setup would be also not wrong. And if you would like to go on very safe, then wait for market to go up higher, breaking this support resistance here, and then afterwards pushing up higher. Okay, so that's for the AUDUSD, and now I'm going to continue with the GBPUSD. So GBPUSD, guys, is super bullish. Okay, I mentioned it also in the YouTube video on Sunday. This market is super bullish, and we can still expect that it will push even higher. This market will go crazy to the upside, and I'm going to show right now all the confirmations why we want to see the market going up from here right now even higher. Now, you can see over here that we are all across monthly area of supply. Okay, this is the level where the liquidity is most likely located. This is why I told you also when we hit at that level the first time, okay, we may see some retracement from here to see the price moving to the downside. And as you can see, we already got some sort of retracement. If you are going to take right now this instrument over here, you can see, okay, the market really went to the downside. Let's see how far specifically, not that much, but 200 pips were in this case, which is okay. But the monthly candle still is bullish. Okay, so the market is still in this impulse. Okay, and that means right now, from my point of view, we would like to see some retracement. Why? Because the market is always moving like this. Look here, impulse, correction, impulse, correction, impulse. Now, how far can this impulse go up higher? Well, specifically, I would like to see it till this area in this case. Okay, so I mapped out the supply area previously, right now a little bit different, and right now I'm mapping it out in a different way. Why? Because the whole liquidity started from here. From here, you've seen the GBPUSD moving that much to the downside. That means the market is like a magnet over here, and it really wants to hit the level. Also, if you have a look over here to the right, you got your strong institutional levels. The market will go up to this level for sure. That doesn't mean right now that it will not do any sort of retracement. Of course, we need to expect some sort of retracements because this market is moving like this. Have a look over here on this weekly. Move to the upside, move to the downside, up, down, up, down, up. Now currently it is a long time moving to the upside. That means from my point of view, it needs to go to the downside to test previous level of resistance, now turned support. Mapping it out right now from an impulse perspective on the FIB retracement, we would like to see a retracement at least till the 0.32, but we could go easy till the 0.5 in this case as well. Switching right now to the daily perspective, you can see that the perfect level would be in this case the daily level of demand at this area, or here within the structure. So I don't care which level would be then the final target. However, I think in this case that this level will be used for the liquidity grab, because the market will then easily go up down here. Retail traders will look for buys. Let me check it out from the 4 hours. Retail traders will look from here to buy it, and what will happen is that the market then will give us this movement to the downside, and then it will just continue pushing to the downside to hit our level, which would be around this area. That would be the daily demand. Yeah, something like this, maybe a little bit above. It's also possible in this case because you also got here this structure level, so that would be the better level in this case. Something like this, maybe then again something like a fake breakout in this case, and then moving up higher. So definitely we will be here in some sort of retracement on the GBPUSD. Yeah, we don't have right now the confirmations for that. Why? Because the market is super moving crazy to the upside. It's super bullish, and looking right now for this potential retracement is not a good idea, because the market could go easily right now more to the upside, and this is what we should right now still focus on buying this one. However, right now it is not the best price to go for a long, as you can see the market is overextended to the upside. Also, it did not approach our levels from the last analysis, because I told you on the daily you would have seen a nice retracement based on this impulse, and the market did not even test the 0.32. In fact, it used this liquidity level from here to go up higher. Yeah, I was expecting that the market would drop more to the downside before going up higher. Yeah, it didn't. But yeah, it's not a problem, really not a problem. You can see right now again a new impulse, and you expect right now again at least a retracement. Now, what I suggest you in this case is to wait for the market to drop down lower, and then you should go for a buy. Like I told you, from a weekly, we really want to see a deeper retracement till this level, and this is why right now I don't have a clean setup for you, because I don't see anything from any time frames right now. This market is right now just super crazy, moving to the upside, and it will still push up higher. Yeah, let's see. Here in this case also you had an M formation. Market was just boom, moving to the upside, and this movement happened because they wanted to see the weekly candle close extremely bullish like it did, and this is going to give us a chance that this weekly candle right now has a high accuracy of being bearish. But as we know from the higher time frame, so from the monthly, we could still go up higher before this will even happen. In this case, on the weekly, you also got a nice M formation here. So yeah, maybe we will test it a little bit more into the depth like this before going then finally to the downside a little bit, only for the retracement. The overall bigger retracement, which will look like this, will only happen at the moment when we will hit this area over here. Okay, this area is we need to see going to be hit, so specifically this area, before the market will give us then a really nice retracement, and then I would like to see a retracement till this level. Okay, so something like this from here, movement to the downside. So I'm going to show you right now exactly how the market will move right now till this level. Only for the short-term perspective, a retracement going down, respecting this area, going up higher, and then from here giving us a nice sharp movement before from here the market will then easily continue up higher to break all levels. That's kind of the idea currently behind the GBPUSD. However, that doesn't mean that the market cannot go right now for this scenario to just go up higher here, something like this. That could be also potential. So we still got this range which could go more to the upside. From my point of view, from any perspectives right now, it is still too overextended because it didn't give us proper retracement based on the daily. Yeah, that's what I can say right now to GBPUSD. So right now, not good to trade. Really not good to trade. Need to check it out if it will give it right now some proper retracements on the lower time frames in this case. Okay guys, then let's continue with some pairs that you asked me over here in the live stream. And I think the first one was the USD CHF. So let's do a USD CHF analysis, guys. USD CHF will be, from my point of view, super bearish. The reason is simply clear, is because of the DXY. I expect on the DXY the market to drop down lower. This is why on the USD CHF we can expect the same thing. You got over here impulse to the downside. The market perfectly retraced between the 0.5 and the 0.618. That's way enough retracement. The market could go down right now easily to the downside. From a weekly, look at this. On the weekly, you got the exact same example that I explained to you at the beginning of the live stream. So if you missed that, it's really a must do. So really watch then the live stream again, because that was the example with the resistance here. Look at over here, that was the resistance accumulating the positions for the movement to the downside in this case, and the market then gave us a drop, a pump to the upside to grab their institutional orders, and afterwards it will drop to the downside in this case. And this is going to happen on USD CHF as well. Look at this. On the daily, you will see here a nice corrective pattern, and what we do expect right now is maybe only a small retracement to the upside in this case. Based on this impulse, we would like to see the market giving us a retracement, okay, like this, maybe even till the 0.618, because I can identify over here a strong level of supply, and giving us movement till that level before dropping crazy to the downside. That's going to be one of the scenarios, because also here you got level of demand. So definitely from here we would like to see at least a retracement till the 0.382, and then we would like to see the market dropping to the downside. Okay, this for the USD CHF. 4 hours, yeah, looks right now also kind of like a bearish flag developing, but I don't think that that's the end. So the market will just go up higher and then giving us a nice drop. Let's see guys. I understand everything what you say. When my English is basic, I love your videos. Thank you, Michelle. You're welcome. Okay, so that was right now USD CHF. So overall, like I told you, every USD dollar is long term in this case. So every USD at the beginning is bearish, and every pair which has the USD at the end, so Euro USD, GBPUSD, and so on, they are bullish. Okay. Long-term perspective, okay, not short-term. The next pair was USDJPY, short position on USDJPY. Well, basically not a good, basically a good idea because of the over a long-term perspectives. Yeah, let me check it out right now. So here on the USDJPY, you had a little bit of different scenario. Why? Because of the market is ranging very much. Okay, so look at this, it's just moving here to the downside. It is not that impulsive like the USD CHF, for example, because the GPY in this case is the pair that is trading against it, and this is why on the USD GPY you cannot expect that strong movements on a bearish side like on the USD CHF, for example. Look at here, if you have a look on the weekly perspective, you got the exact opposite. Okay, you got in this case very bullish movements to the upside, and based on this thing what you see over here, you expect the market to go up higher. You also got here clean W impulse to the upside. Right now it gave us a retracement, and we should expect the overall bullish continuation in the USD GBY. However, look at this, that was the area where I was looking for a buying opportunity. The market perfectly got into this area and then went up higher. Right now you're still at weekly area of supply, daily area of supply, and you can expect at least a movement to the downside. However, from my point of view, it looks like the market could go easily more to the upside, but I'm not 100% sure like the USDJPY will move. But from a 4-hour perspective, you got over here a W here, and you got an AM over here. That means you would like to see, based on this impulse that you see right now, retracement. You're at the 0.618. That's good area for a nice potential short setup in this case. And yeah, let's see if it will really go to the downside. So really high accuracy right now, this market could go down easily to the downside. Let's see if it will do this. If not, it's not a problem. Just try and error. This is how this business works, and this is how you will be at the end of the month, or at the end of the week. You will be then profitable, guys. Okay. So what was the next pair? I think it was gold. Oh no, VTI. Sorry. So crude oil is the next pair. So I already did it on. Where is my US oil, guys? Wanda doesn't. Is this not supported anymore? Wanda, no. Do you know it, guys? Wanda doesn't have that US oil anymore. All BT crude oil. Okay. Oh, sorry, Wanda never had US oil. Sorry, I'm sorry. Okay. Yeah. Basically, that was the last analysis. So it's really the analysis that I'm looking for. Look here. From a monthly perspective, you would like to see right now a deeper retracement. Okay, you would like to see based, like here, this is what I mapped out at the last time, based on the last impulse lag. You would like to see the market giving you a retracement. You got here supply area, you got demand and support area over here, and the market should give you right now at least till the 0.382 a retracement, or maybe even lower. Okay, maybe the 0.618 is also very pretty achievable. Let's see. Based on the weekly, is still super bullish, and you need to wait for further confirmations. Daily, same thing, super bullish. This is also what I explained to you last time when somebody asked me about VTI, about US oil, that this market should still go up, okay, because we didn't hit the level properly. But right now we're very deep into the level, and we started this huge impulse, and right now what we can expect is, at least based on this impulse right now, a retracement. That will be definitely an area where right now you need to have a look on the lower time frames for a proper price action confirmation to find a nice entry. So from my point of view, from a long-term perspective right now I'm speaking, I expect that the market should drop to the downside. And if not, then you expect something like this. But fundamentally, we are bullish for sure. So fundamentally, we're super bullish. But that doesn't mean right now that the market should not give us proper corrections. Okay, so corrections always needed in the market. Yeah. So let's see how that thing will develop. Now I would like to switch to gold. Okay, you already wrote it down, and that was the last analysis about gold. So we had a pretty nice head and shoulders over here, but I would like to start with a clean chart explaining you everything from scratch. In this case over here, I just looked today a little bit more on some analysis on gold on TradingView on YouTube, and I've seen that people were dragging their support resistance on gold like this. That was an option, and this is definitely a clean option which you can do. From my point of view, I don't do it like this. I drag my support resistance on gold like this. Why? Because in the first place, I'm not that, so for me, that support area is not that important. Why? Because I like to follow the movements and not the support resistance levels. In this case, I have a clean confirmation that this is my impulse. And I know that based on the impulse, I would like to see a retracement. And I know that the 0.5 is right now at a very strong level. Because also if you look from this level exactly to the left, you will identify that you got here previous resistance levels. And you got over here the most touches. And is the level which is aligning currently best with us. If you have a look right now to the left and you drag it like this, then you can see that this level was not really respected. And so not a single movement over here really respected. It was only this one over here, but the market didn't give us proper movement to the upside from that level. Okay, so this is why it is not, how should I say, it's not that important to drag your support resistance like this. However, you can still do it, and you will see that you will have a similar outcome like you will do it like I do it. Because in this case, you need to interpret then this whole thing over here as a fake breakout because the market has closed above it. Okay, in this case, you can do it like this. And what you need to see right now is that this market will remain at least be above this area before going up. But I will show you the same things. But if you would have done your analysis like this, then you would never use the 0.5 as a potential returning point. And I do it. Why? Because of the 0.5 is the best one aligning with this one. And this is why the 0.5 was pretty predictable in this case. This is how I use it in this case. And as long as this level will be, the price will be above this area, I expect the market to be bullish. At the moment when we are going to break this level, we can expect that the market will go for a deeper correction. Okay, then we're going to redo our whole analysis in this case. This is why I don't expect that much. That scenario, I expect that the market should be turned bullish from here. Also because we got proper retracement. We got enough retracement for gold based on this impulse over here. Right now, let's switch down to the weekly time frame. What we can see here is that the market perfectly rejected this area of supply. So it is still in this retracement over here, still in the correction phase, in this bullish flag, and you will expect something like this, okay? Movement to the upside afterwards. However, the weekly is still below this resistance over here, okay? As you can see, impulse, correction, and continuation to the downside, creating lower lows. Now, the last weekly candle is giving us a movement to the upside, drop to the downside. What can we expect right now? For us, important right now is this level, because we are trapped between support and resistance. Now, the idea is to buy gold from here, to sell it from here. I don't recommend to sell. Why? Because if you sell it from here, you got a high curiosity that the market could easily break it through that level. Now, it is not absolutely, we don't need to really expect it, because from higher time frames, we would like to see the market going up higher, okay? Switching right now to the daily. On a daily, you can click, 4 hours is that. So from a daily, guys, the market is still in a bearish environment if you have a look on this whole thing over here. Why? Because the market is creating those. From a market structure perspective, you can see over here lower lows. That was here based on this case over here. That was a retracement, okay? Because I see this whole thing as an A, B, C correction. And that was then the correctional movements over here. So if you have a look right now. So I'm mapping it out for you pretty clear. So you got, that's your A. And then here you got your, sorry, I forgot that one over here. You got a clean correction, market structure. Okay? And then from here, that whole thing over here is that bearish flag for the market to go down lower. And in this case, we tested that trend line, as you can see. We pretty nice tested the trend line. And we also created a new lower low. Okay? But we rejected overall this daily level of demand. And this is why this is a price of interest from my point of view. So I'm really having a look at this area. So dropping over here an icon like this. So I'm looking for here to get a nice sniper entry when the market will approach this level, and then from here getting longs. So we got currently pretty good confirmations that this price could go easily more to the downside before the market afterwards will continue to move up higher. And also, if we're going to get this movement to the downside, we will get here some kind of an W formation. Now, let's have a look on this chart, because here I mapped out the ABC correction more in detail. So you got here the 1, 2, 3, 4, 5 waves. You will see it more clearly from a 4-hour perspective. You can see it over here. Then you got the B, and currently we're still in the C. What I do expect is that the market will hit that level over here to go lower than this spike over here. So this is why we got also a chance that we will hit this support level, which is the 0.5 based on the monthly. But let's see if it will really go that much to the downside. So this level of demand is the one that I'm looking the most right now. And look at this, on the 4-hour, we had a nice head and shoulders. I posted it on TradingView, and this is what the market has given us also from this level of demand that we got here above. Okay, the market gave us the movement to the upside. And then I mapped out another level of demand, which is over here, but this level is also already tested. Right now I don't know how the market will move, but what I do expect right now is definitely to get a move till that level, giving us from here a quick reaction and then going down lower. That's kind of the idea right now behind gold. So definitely what I recommend currently from here, no trading. Only if you're currently in short, then you can put your stop loss to entry and you can rock it till this level. And here, that's a high interest of level to get for a nice long from here, okay? I mapped out this potential setup because maybe the price would have gone only till that level. But right now, I expect that the market will easily go down lower. But let's see how it will react to that level as well, okay? Because this is still a potential scenario, but also keep in mind that that is the one with the most liquidity in this case. If that will be the case, we will have the most liquidity for the movement to the upside. And what we can expect afterwards is definitely a strong move till this high over here that we had on gold, okay? And as long as we're above those areas, above the demand and above the support area over here, this market will be still super bullish, and it will give us the best confirmations because this is such a low price, and hedge funds are definitely right now interested in buying the market from that level, okay? So Euro GPY was the next one. Let me check it out. Exactly, look over here. The monthly is in a very bullish environment. Why? Because it is giving us impulses, correction to the upside. You also got here W formation. Currently you are at the level of resistance from a weekly perspective, and I told you got two options. Option number one is to break through this level, which was the one which I was expecting the most. Why? Because the market has already given us a proper retracement based on this level of resistance, as you can see, and it grabbed then the most liquidity over here. Also on the weekly, you got here a W formation, and if you're taking right now your Fib retracement based on this last impulse leg, you can see that we already had a retracement till the 0.5. And this is the one best aligning with structure, as you can see over here. And the market from here should go up higher for higher lows and higher lows, higher highs and higher lows. And this is what the daily is giving us today, currently breaking through all this liquidity. What you can expect right now is still that at some point over here, the market will give you the retracement. And this is where going to be your chance to buy Euro GPY to the upside. That's the idea currently behind Euro GBPUSD. Wait for a proper retracement. You are already at a global higher high in this case, and the market should then go down lower for a correction, and then you can anticipate the movement to the upside. Okay? Yeah. Flo. Guten Morgen, Flo. Hallo. Bank holiday today might see abnormal moves. Yeah. That can be definitely right now an option. Let's see. I didn't know that right now, to be honest. So I don't check that too much. The economics stuff like this. What I like to do is still to do my analysis because it will be followed. Yeah, today definitely. Right now, if you're day trading it, definitely you can expect right now some abnormal moves maybe. Yeah, however, I don't see right now proper setups. Only the Euro USD. I'm right now a little bit interested in this kind of movement. Like I told you, on every single pair right now, it is not clear where to entry today. So just waiting a little bit would be the best option. So right now here you got the supply. Going right now short would not be would not be a bad idea. Okay. Okay, guys. Let's have a look then a little bit on Bitcoin as well. So as you can see, we're still at this minus 272 retracement level that I told you. So from here, you could easily expect the market to give us a retracement. Also from a 4-hour perspective, you can see over here a rising wedge, which is pattern of exhaustion, meaning that right now, again, all the financial institutions are selling it. So they are closing their buying positions, and this will lead for the market to go to the downside. So I definitely expect right now that this market will drop to the downside. Something like this is definitely something what we need to expect on the Bitcoin chart. And if it will not respect this area, then it will go up higher till the minus 618, which is going to be the next level of resistance. But let's see. Currently going short is not a bad idea, to be honest. If you have right now crypto account anywhere to go short, because normally forex brokers are not that best for that. Just be careful with trading low liquidity. Yeah, that's right. That's right, Flo. Yeah, then XRP, pretty nice. So this is really approaching our setup exactly like I explained it to you over and over again. Going right now over here to the daily time frame. That was the thing that I explained to you, that we got over here a W formation, and we would like to see the market retracing at some point. As you can see, that was daily level of supply. It went a little bit higher, which is absolutely not a problem. But what you can see over here is that the market is giving a retracement based on this impulse, perfectly retracing right now the 0.5, which is aligning best with structure, but also the 0.618 is still a level which we could easily see. So if the market will right now go down lower, buying from the 0.618 or even from the 0.786 would be a very good idea, and then going up higher till $1.50. Still my analysis. Look here from the weekly perspective, the market is going up higher, giving us the retracement that we wanted to see. You got W, you got the first retracement based on this impulse, and right now we're doing the next impulse. So from a weekly closing perspective, I expect that this week will be again a bullish one, but that doesn't mean that this daily candle cannot go right now lower. Of course it can go, and it will go maybe lower, but the 0.5 is still a level which is pretty nice right now, okay? And from here you can easily expect right now the overall bullish continuation. So if you did not invest right now in XRP, that's one of your last chances right now to do. Don't wait right now for the price to go really till the 0.618, because maybe it will not hit the level. If you would like to invest in cryptos, I have still a Coinbase account over here with a link for you where you can save $10. So you will get $10 in Bitcoin as a bonus if you use my link. If you would like to buy XRP, you need to do it maybe from another platform, because Coinbase is not supporting XRP anymore. But still, if you have your XRPs on Coinbase, which is what I do currently, I still have my XRPs on Coinbase, it is still a safe opportunity, so it's not a problem if you have it. Okay, that was an update for XRP. So keep in mind, I still expect those $1.50. I have my positions from 20 cents. I bought XRP here, and I bought XRP at this area again. So definitely right now the best things over here. And look here, also the same example like I told you, explained to you at the beginning. That was the support area, and what the market did, it broke through it, went up higher, giving you the retest, and it went up higher. So this whole thing over here was again just a fake breakout. It wasn't W formation, and you was expecting this movement to the downside. And I explained to you also at that specific time the exact price where you can buy XRP, specifically exact at the 0.618 based on this impulse over here. As you can see, the market here previously tested the level almost likely, but I told you I still expect the market to go down lower. Then it spiked into the level, and I told you also at that moment that the market should fill in this wick, and this is exactly what happened. And then boom, the market gave us sharp movement to the upside. Okay guys, do you have any questions, any pairs? Just write them down right now. Okay guys, any questions? Can ask me everything you want. It's not a big deal. Yeah, because currently we're almost over an hour, and yeah, if there are no questions guys, then I would like to say thank you for your attentions. I really appreciate it. Right now I think that was the biggest live stream so far, so we had over 40 people live, and yeah, really enjoyed this doing for you. And yeah, Just a quick question for you. Do you like more than likely to have live streams like this, or do you enjoy also the YouTube videos like it was on Sunday? Because on Sunday you will get informations very compacted, so in a very short term, but the live stream is more than likely for everybody who's trading live, so that we're going to discuss and we can talk a little bit about everything that we see right now. So this is why I would like to do both. So I would like to also sometimes just upload on a YouTube video and sometimes only doing live streams. Okay, this is how I would like to do it. And if you have some feedbacks for me, you can write it private on Telegram, or you can write it right now here or in the next live stream, guys. Yeah, then thank you for your attention, guys. We're going to see the next time with a new live stream. Again, like always, add a 0. Let me write it down for you again. 07:45 in the morning, and if we will do a spontaneously live stream today or during the dinner time, I will definitely announce you in the Telegram channel, so make sure to turn on your notification. Okay, I will be then again live tomorrow, guys, as always. Thank you for your attention. Thank you, Michelle. I like your videos. Bye bye. See you next time, guys.